Hello and welcome to the Loan Officer Wealth Podcast. I'm your host, Chris Johnstone, and I have an incredible offer for you today. What we've done is we've taken the 10 most profitable methods to grow your mortgage business that we have learned from interviewing the producers on this podcast, many of whom are doing over $100 million in volume per year. And we've packaged them together into a condensed 45-minute training where you get to learn the 10 most successful and profitable activities that you should be running in your mortgage business. Then we show you how to automate those processes with people and systems so that they run and continue to produce loan applications and new partners that want to send you business pre-booked into your calendar without you having to do any cold calls or chasing or really any work. It's a blueprint for you to be able to produce more in your business while actually working less. And you can go get that training today for free at chriswebinar.com. That's chriswebinar.com. So make sure you head over there today, grab that training for free, and make sure that you watch it, because the sooner you get started on implementing these strategies, the sooner you can see results and continue to grow your mortgage business. Thank you again for being here with us for this episode, and enjoy another one on the Loan Officer Wealth Podcast. Hello, everybody, and welcome back to another episode of the Loan Officer Wealth Podcast. We are blessed today with Ryan Roberts. Ryan, thank you so much for being on the show.
Hey, good. How are you, Chris?
I am very good and looking forward to our conversation today. You're a very interesting guy, and so I'm looking forward to an interesting conversation.
Nice. Yeah, I'm curious as to what questions will come up, and basically the state of the industry and being able to knowledge share around everything that's going on from our point of view.
Awesome. Right on. Well, for our listeners, because it is pretty normal for us to have top producers and people in the mortgage industry on the show, can you give us a little bit of your background?
Yeah. So background: pilot, kiteboarder, hardware and software engineer. Somehow I wound up in mortgage marketing. I did some time in and out of Google, YouTube, and Looker. So ran pretty sizable programs at Looker, roughly 55 million a year in ad spend, and then on YouTube's side of things, the ops or operations end of paid media for YouTube's premium subscription products. And then Google, I was on the central team at 8 on the partners program, which is a very prolific marketing team at Google, responsible for managing about 300,000 to 400,000 agencies that sell Google ad inventory, etc. So across the gamut. Again, somewhere along the lines, I wound up in mortgage marketing.
Well, it is a good place to be. So, with that background, I mean, the one thing that I have to ask is what you think is probably one of your favorite campaigns that you've seen in the mortgage space for somebody going direct to consumer and trying to get a mortgage customer from advertising on the internet?
Oh man, that's a great question. I really think it's the institution and the operations that make the campaign and less the campaign. That's really more my point of view, and it comes from a quantitative, focus rather than a qualitative focus. So I would, arguably say MBank is probably one of the most prolific direct-to-consumer non-QM lenders in the U.S. And we operate paid media for them, and so I'm slightly biased in that sense, but we know the numbers incredibly well and have scaled their programs quite high. And there's still plenty of room as a lot of these lenders are falling off. But in terms of campaign specificity, I don't have any specific campaigns that come to mind, but more so looking at it from the ops perspective on the lending side.
Absolutely. And so when you work on a campaign like that, what is your approach to the creatives and what you're putting into the marketplace? Is it keyword-based campaigns just to get that person who's searching for a mortgage and get them with like a rate-based ad, or is it, are you retargeting and trying to build that relationship? Like, what does that look like?
Absolutely. So the analogy I give everyone is people search for things on Google and waste time on other ad channels like Facebook, Instagram, etc. Right? And so there are two cohorts of traffic, being warm and cold. Warm traffic being people that have interacted with you and your brand and know who you are. maybe have not converted yet. And then cold is obviously a net new introduction or interruption from an impression standpoint. And the way we treat that is, budget indexing on the channels that have the highest statistical propensity to convert. So in this case, we'll say Google. And then we subsequently follow them on the other channels. To answer your question about ad contents, there's a lot going on in that arena right now. And I'm going to give a rather verbose answer, but the special ad categories have ultimately constrained the mortgage industry, right? And there are numerous means of actually circumventing those constraints. But at the end of the day, you're looking for ads that have as much information in them as possible. So the more upfront you can be about rate and term while remaining compliant, the better off you are. And we know statistically that ads with those types of numbers in them have a much higher click-through rate and subsequently conversion rates. The other component to that is the landing page itself, tightly coupling the campaign, right? So one-to-one at the product level, all the way down to the landing page and the questions that you're asking in that landing page specific to the box that lender is lending on for that particular product. So for example, at DSCR mortgage, you're going to target very specific terms. You're going to follow that situation all the way down to a closed funding scenario, ideally with a loan officer who services just that product, right? So end to end, you've got a better shot at closing the funding scenario versus just kind of doing the traditional, we generate leads and then, kind of hope and pray that you understand it and it converts.
That's a phenomenal answer. And for those of our users that are somewhat newer to paid media, or a synopsis of that is one product gets one set of targeting, one set of keywords, one set of ads, one landing page, one person that's responsible for following up on those leads, and then a specific loan officer within the organization that handles those applications. So they're specialized on the campaign, but also the product.
Well said. I probably just should have said the same thing.
No. That's my job. Your job. Yeah, it's amazing. So that is super helpful because I don't think people understand at your level how nuanced online advertising has to be in order to make it profitable.
Yeah. So let's talk a little bit about what the future holds and some of the pain points with the mortgage space in general. Like the biggest pain point right now is that all these lending institutions focus on lead gen. It's quite frankly nonsensical, even as a service provider in that space. When you're, how do I say this? So you're essentially reinforcing the ad channel's learning from an ML and AI perspective to continue serving leads, right? The second you start doing mid or bottom funnel, you completely change the way targeting occurs for actual loan applications and loan fundings. I have yet to work with a single lender in the 8 years that I've been doing this that's tracking mid and bottom funnel at the ad channel level. Wow. So that's like problem number one across the industry is like leads and then mid to bottom of funnel conversion tracking. Problem two is forthcoming in the sense that 2023, 2024-ish, we're going to see third-party cookies go away. And there's a profound change occurring in digital marketing, digital advertising, in which they're actually going to be building conversion tracking into the browsers. And this will open up a lot of opportunity for lenders to start tracking mid and bottom of funnel, optimizing the ad channels for less meaningless conversations and more loan applications and more fundings.
That's amazing. So for those of you that aren't familiar with top of funnel, middle of funnel, bottom of funnel, top of funnel, somebody who has no idea who you are. They're just out there, they're searching on the internet, and they've just entered the zero moment of truth by searching a keyword, and they're coming into the mortgage business. Middle of funnel, and please, Ryan, if I'm mistaken on this, but think middle of funnel is like somebody's been to your website, they've maybe filled out a contact form, but you haven't spoken to them yet. They're just kind of like, they're aware of you. They know who you are. They've filled out a form. It's a completely different advertising campaign that needs to go to that person than it is somebody that's top of funnel. Then you've got bottom of funnel, which is somebody who has submitted a loan application. They're out there, they're pre-approved, they're looking. It's a different style of advertising campaign that you should be showing those people so that they actually fund with you rather than getting lost to a competitor. And then I have seen some other people put bottom of funnel into like client retargeting of like somebody
Yes.
does business with you, then you've got to continue to advertise to them so that you generate referrals, you generate repeat business, and there's a lifetime customer value relationship there so that they're coming back and doing business with you more and more so that each customer is worth more and more in your organization.
Yeah, well said. I think that in the non-QM hard and private space in the US and Canada, it's an incredibly non-sticky business. People rate shop, people move from lender to lender, and establishing and maintaining that relationship can be done and can be measured statistically with paid media to retain that borrower and future deals that they may have. You know, we have one client that it's almost mind-boggling how well they do at retaining their book of business and seeing that over the years and how it's actually drove so much additional revenue and closed loan volume. But we've got a really cool tool that helps us understand upper, mid, and bottom of funnel impact. I mean, I can share my screen real quick and kind of walk through it, so there's some numbers around this stuff that might be helpful.
Yeah, absolutely. And for those of you that are listening to the episode on iTunes, thank you for being a listener and a subscriber. But just know that all of our episodes do go on our YouTube channel. Head on over to YouTube and search for Chris Johnstone, and you'll be able to find this episode on YouTube. We'll also have the link to it in the show notes for you as well.
Cool. So Chris, let's check this out. These are some real numbers from a client last month, kind of a mid-sized client for us, but we get two questions more common than not, like how many leads am I going to receive and how much am I going to close, right? And so provided that the lending institution can scale operationally in a linear manner, we can take where they're currently at and paint a relatively clear picture of what it would look like to go from 5 million a month to 20 million a month and the sort of return on ad spend that they can expect. So we'll just start at the top. Everything in yellow here is editable, meaning that you guys could make a copy of this and put real world numbers in to understand the outcome. But this client spent around $55,000 in ad spend across Facebook, Instagram, and Google. They had about a 75% contact establishment rate. That's a very standout and probably the most pivotal number in the overall outcome. If your loan officers are leaned out and you're at 35%, you're going to close a significantly lower amount of loan volume. Cost per lead was about $75. Number of loan applications actually taken against those leads. And then you can start to see the waterfall. They closed right around 33 of those deals. And then because of the way the market is currently sitting, basis points earned is usually 2.5 to 4, depending on the client, and loan values are typically in the 380s. So we'll pump these a little bit just to paint a little bit nicer of a picture. But you can see that they would have done about 12 million in lending for an additional 313K in revenue at a 5.68 return. And so the way the lender or loan officer or whoever is putting capital on the line for this type of investment has to look at it as money in, money out. And the return on ad spend is the cleanest indicator. We put $1 in, we got $5.68 out. And so then the next component to that is, all right, we do 10.2 million a month in lending. We're spending about 45 in ad spend, and we want to get to double that. We're going to need to spend about 91 and handle roughly twice the lead volume. We'll close about 55 units. So long-winded, but that's generally the formula.
So that is absolutely phenomenal. And to see it in this visual format, I think will crystallize how online marketing is actually supposed to work in the mortgage industry for a number of our listeners. But you pointed out something that I've made a primary focus in our organization for the last couple of years, and that's that contact rate. And so I'm very interested in your opinion on when you generate these leads from the internet and you give them to a client. Are clients of this magnitude giving the lead directly to a loan officer and making the loan officer responsible for making the first contact with that lead? Or are they giving it to a specialist who's there just to convert the lead to an appointment?
Love it. So we see twofold. We see actually three. We have what you described, which is an immediate handoff to a loan officer where the lending institution is holding the LO accountable for contact establishment. That's option one, and quite frankly, usually the least performant. The next two options are an in-house team where they're training in sort of a Top Gun manner from, hey, you're quote unquote a junior LO. Here's, 300 calls, make contact establishment, understand the box. And then as soon as you have someone on the phone, make a warm transfer to an LO who's adequately established and understanding on that product. And then the third and final option for the really large players is, a company called Versa at San Diego. Really good friends with these guys, phenomenal team. But basically, they are what we described in that in-house situation, but an out-house situation or a contract partner that handles the lead volume. And it's typically for really high volume teams.
That's amazing. And we sit somewhere in the middle of that because we provide concierge services for mortgage lenders. And we also have a program where we will help them hire and train their own concierge agents that are internal. But we don't just do inbound lead gen. We also call past customers. We also call realtor referral partners and financial planners and investment advisors and all that kind of stuff. But it's very, very normal for us to go into a mortgage organization and double the amount of appointments that they've got with no additional ad spend, no additional leads coming into the business. It's just like, if somebody calls your phone number, somebody actually picks up the phone and actually makes the calls to the past customers.
It's a remarkable statement. And if I were to call, 10 random lenders for our known list of private lenders in the United States, I would say probably one would answer right now.
Yeah.
And so just filling that hole in the bucket alone would have a profound impact in, revenue and bottom line.
Oh, absolutely. But then taking that back to what you're doing with top of funnel, middle of funnel, and bottom of funnel, to then have retargeting ads that are going out to those people that are showing testimonials and showing happy clients and happy deal scenarios and all that kind of stuff. Again, just increasing that contact ratio and that closing ratio. That's so important.
Yeah. And it's amazing the difference between teams that perform at, 70, 80% and 30, 35% is just, it's absurd. It really is. The amount of loan volume that they produce just because of that number, it's mind-boggling. Sorry, go ahead.
Well, I was just going to ask, do you find that your closing ratios on the applications that are taken are pretty standard from company to company, or do you see some companies that are just like, they've got really great closers, so they're going to close more of the leads? Or is it pretty much, if you can get that application to a loan officer, their closing ratios are pretty much the same?
No. There are two variables we look for when working with teams: number of product service, so essentially product diversity, and number of markets serviced for number of states. The reason being is that it gives us a much more diverse opportunity to deliver meaningful conversations, or for those clients to have meaningful conversations with prospects. The next component that we look for is underwriting, ops, and fulfillment. It has almost nothing to do with the loan officer in a sense, because as long as they make contact establishment, you've already made it 80% of the way there. Yep. The next 20% after you've taken that loan app is really dependent on the other team. What are the relationships like between the LO and the underwriting team, et cetera, et cetera. That's the difference between, a $12 million a month team on $55K in spend versus not.
Wow. Product and team.
It really is.
That is amazing. So looking into the future and looking at the campaigns that you're working at right now, what are you most excited about? What are the things that you think are going to be really the future for loan officers to be looking at with their marketing and advertising?
In transparency, no holds bar. I think that the general collapse of a lot of the lending institutions that are around us right now is an incredibly advantageous thing for the teams that have an airtight operations and fulfillment processing in place. I've seen ad inventory costs drop drastically over the last few months, and we've also seen some extremely large clients. I think even Wells Fargo just recently announced that they're moving out of the mortgage industry, or some huge company like that. It's incredibly advantageous. And then you've got the non-QM side of things, which is becoming incredibly appealing from a consumer perspective, because, I think roughly 55% of the US populace now has some sort of secondary income from a qualification standpoint that would no longer meet the box at, Wells Fargo. And pardon if I'm getting that name wrong, if that's the wrong lending institution, but essentially, summarizing that, a cost decline, awareness in the market of the products that are now prevalent that we service, non-QM, DSCR, essentially all the gamut in the non-QM space. It's honestly the best time I've ever seen it from a paid media perspective in this space. You're muted.
That's incredible. So, are you finding as you go into advertising specific products in specific locations, are you focused more on advertising on Google and YouTube because of search-based intent and the fact that you can show the right ad to the right person based on what they've searched? Or are you leaning more towards Facebook and Instagram right now? Like, where are you finding the good quality leads coming from?
The media mix is fascinating. Frankly, YouTube does not work from what we've seen. Paid search on the front end, so Google RSA ads or responsive search ads. And there's a lot that goes behind that. There's like different components, there are extensions on the ads, et cetera, like a fully built, maximized, RSA campaign with, one ad group, 3 ads, all scoring excellent quality score. Like that is the upfront, like most pivotal thing in terms of like, all right, we're all playing in the sandbox. Let's make sure that the sand that we're buying is the absolute best. And then secondary to that, just kind of rounding out the Google statement, more closed funding scenarios occur from Google than any of the other ad channels, with kind of a catch. We see high volume, really high loan amounts out of Instagram, and low volume conversions, lower loan amounts out of Facebook. However, they all work cohesively together. You really can't have one without the other.
And I'm assuming you're taking everybody that's getting the initial click on Facebook and retargeting with Google, and same thing, Google, it's just if they land on it, they're in all of your ecosystems.
That's exactly it. And there's an obvious audience or third cohort of traffic between, warm, cold, and converted. We don't necessarily want to talk to converted or continue serving ad impressions to converted. There's a weird mental nomenclature there. Like arguably we could, because the sample size is so small, but in terms of responsible use of a client's ad dollars, the best way to utilize that is to weed out the 20 or 30 people a month,
Yep, no, 100%. And will you also take like past customer lists and lists of qualified referral partners in the marketplace and do advertising to generate referrals and post-close business?
I have not. The closest we get to that is using closed loan data in arguably a cold or retargeting manner.
Yeah.
And occasionally we'll use like large VA lists for VA lending. But again, that targeting is so degraded now because of the iOS 14.5 stuff a few years ago, and then these constraints and special ad categories. You're almost better off just leaning into the ML and AI of the ad channels themselves to kind of optimize for you, as long as they have good signal back.
Yeah, absolutely. Well, this is such an incredible opportunity for our listeners, because it's very rare to have somebody that's this deep on campaigns, specifically in the mortgage space, with being open to, really kind of open up the spreadsheet that you've got here and show us behind the curtain. So is there anything that you feel our listeners should know about online advertising or what you do about, advertising in the mortgage space?
I think, a few really important things come to mind. Just adding some clarity around how lenders can reconcile for closed loans, right? And there's sort of a holy trinity that's occurring on the backside of this, death of cookies or death of third-party cookies thing. But prior to that, now you got two data sets. You've got an LOS, loan origination software, and you've got a CRM. And the unique identifier for us in helping clients understand their impact on revenue or return is email address. And
Yeah.
of course, we know that it can be, commonly different between a broker and the borrower, et cetera, but it's this closest mechanism that we have. Really, at the end of the day, you're looking for three things on that match. You're looking for the email address between LOS and CRM at close, the date it funded, and the loan amount funded, right? And
Yep.
from there, those three things are enough to paint an objective picture on that loan closing. And depending on how deep you want to go in conversation, we can talk a little bit more about the click ID stuff.
And so I think as much as I would love that conversation, I don't know that our standard listener would appreciate that as much as I would. So maybe we can have that one offline.
Cool.
But one thing that I do want to really drive home on that point is like three simple pieces of data. And if you're trying to run multiple campaigns across multiple states, maybe a little bit of a geolocator on there, but like just that simple information and feeding that information back into the ad networks is so important in today's advertising world to make sure you're serving your ads to the right people at the right time and making sure that you've got a quality consumer in there. We lost track of how many people that came in, spent $1,000 on Facebook ads and said, this doesn't work. And it's like,
yes,
you've got no data. You've got no, you have to have, if you're going to step into the online advertising arena, and keeping in mind, most loan officers make the majority of their money from going out to their past customers and getting more referrals and talking to referral partners. And there's three ways to grow the business: past customers, referral partners, and marketing and advertising. So this is, 33% of your opportunity in the marketplace is to generate these leads.
Mm-hmm.
But if you're going to move into it, you have to move into it understanding that there's an investment to acquire the knowledge and the data that you need in order to actually make these campaigns successful. And what Ryan is sharing here is absolute gold for making that an effective investment.
I appreciate that. And I think the lending side of it has always been very interesting. And back to one of the original statements is they all optimize for leads, but the future is less leads. It's about how you can tell these ad channels to optimize for the events that are of meaningful value. And there's a huge technical barrier to entry in that. And it's really easy to generate leads in this space. It's incredibly easy, but it's signal processing. Like, you've got to have really good leads or really good lead capture to get to that outcome. And then you've got to measure it manually.
Yep.
And so it's not just LOS and CRM, there's an analyst involved and all the components that really drive it,
Absolutely. Now, you mentioned another topic that we get a lot of questions about, which is lead capture. Like, what type of lead generation page? Is it a survey? Is it a calculator? Is it what is it that people are out there really looking for to drive the greatest opt-ins on your offers?
So good. Low friction to high friction. This is a kind of theory in lead gen where the first, 6 questions of a 10 to 12 question lead form are nothing but clicks with a mouse, right?
Yep.
And then no personally identifiable information or questions are asked until the last 2 or 3 questions. So it might look something like, are you purchasing or refinancing? Is it what type of property it is? The address of the property is a really clear indicator as to the overall borrower intent. So just collecting like a postal code or state may sound like it makes a lot of sense, but arguably you are driving quality down. And then the last kind of few questions are always going to be, first name, last name of the borrower, the email address, and then an SMS validated phone number, right? That's a key component to that, is the address and the phone validation. So they actually get a code on their phone or something like that before they can make a submission. And that's a huge factor in that 75%, is making sure that you actually have a true borrower, somebody didn't fat finger the submission, etc.
Yep. Oh, 100%. Absolutely. Ryan, this has been exceptionally valuable. for the listeners that are looking at campaigns of this scale, how do people get a hold of you? What's the best way for people to reach out or to get more information about what it is that you do?
Yeah, so for teams on the smaller side, below 5 million, we can certainly refer you to a great and trusted partner of ours. For teams that are, 5 to 15 million and looking to scale, you can reach out at, e1even.com or the number one, even.com. Happy to have a conversation and help out if I can, or refer you to a team that can.
That is amazing. And all of those details will be in the show notes. So, again, Ryan, thank you so much for being on the show. I'd love to have you back and get deeper into the weeds on some of this online advertising.
Cool, thanks.
Hey, it's Chris. Thank you so much for listening, and I hope that you enjoyed our guest today on the podcast. This is a reminder that we have just finished taking the greatest lessons from all of our guests and packaging them together into a brief online video presentation that's going to teach you the 10 most profitable ways to grow your mortgage business. And then we show you how to automate those processes in your business with people and systems so that you get the results without you having to do the work every day. This is quite literally a blueprint so that you walk into your mortgage business every day with pre-booked appointments with borrowers that want to meet with you and referral partners that want to send you business, so that you are spending your time inside your mortgage business on the highest dollar per hour activities, and you truly become the executive of your business, a true business owner, rather than just somebody who's going to a job every day and making a wage on the way through. This is an absolutely incredibly powerful training for you, and I cannot wait for you to experience it. So head on over to chriswebinar.com. That's chriswebinar.com to get that free training today. Now, if you could do me another favor, if you enjoyed this episode, please head on over to iTunes, search the Loan Officer Wealth Podcast, and give us a 5-star rating and review, really on any podcast platform that you're watching this on. That just 30 seconds of your time goes to help another loan officer in the industry discover this information and really help put their life and their business on track for more success. We are all in this together, and there is more than enough for all of us in the industry. So I would love if you left us that 5-star rating and review. Don't forget to stay tuned for our next episode, and I'll see you then.